morning. I know it's not our normal Thursday morning, but it's Wednesday down here in New Zealand, and we've gone live, and we have got the beautiful ladies from Currency Partners on our other side. Good morning, ladies. How are you? Or let me say good evening, rather.
Good evening and morning. Good evening, Jan.
Yeah, it's morning. It's Wednesday morning, but Tuesday evening in South Africa. So, yeah, and this morning we're talking all about what we used to know as financial immigration, which has changed now to tax migration. And can we ask you girls to introduce yourselves?
Okay, I'm Mariska, and I work with the tax part of the whole process. So basically, the SARS part, we handle all of that.
I am Donna. I'm the head of the client services team at Currency Partners, who facilitate the tax migration process as well. And then I'm Tanya from Currency Partners and a business consultant and assist with the relationship of the client.
And normally when somebody calls me about tax migration, I say, wait, I'll ask Tanya to call you. And so Tanya is on screen this morning with us. Tanya, you've been with us quite a few times already.
I certainly have, and exchange control regulations keep changing. So we thought it'd be great just to do a catch-up session and inform the clients on the new changes that have been affected with tax migration.
I've got a few questions here this morning, so sorry if I put my glasses on to read them. Yeah, people still refer to financial immigration. I mean, that's the lingo on the street, but it has changed. So, what is the big differences between financial immigration and tax migration?
So the main takeaway is that the financial immigration, as it was known before March 2021, was a process sitting with the Reserve Bank, the South African Reserve Bank, and that is where the dispensation sat. That has now moved to a SARS, South African Reserve Revenue Services process. So the SARS, the Reserve Bank has basically taken the process from the Reserve Bank and moved it to a SARS dispensation, hence the change in the name from financial immigration to tax migration. That's the difference in terms of the wording.
And me being a normal South African, I would have to ask this question. Is it better now that it's with SARS or not?
So we have seen that in the transition, I do think that the Reserve Bank and SARS, you know, they do have their own processes. They are guided by each of their own legislation, and you know, there were some gray areas in the beginning which have been ironed out. There is some gray areas still in terms of trusts, for example. And I can say that, you know, the Reserve Bank and SARS don't talk to each other, but I can say that the process has become a little bit smoother in terms of the understanding and the process. It's mimicked very closely to the previous financial immigration process, where you still declare your assets and liabilities, albeit not to the Reserve Bank anymore, but to the South African Revenue Service. And basically the first part of the first step, the Reserve Bank step, has been removed, and we just start now from the SARS step and move forward from there.
Yeah, oh, that's interesting.
Just to add on what Donna, just to add on what Donna also mentioned earlier, SARS now has access to 97 tax offices worldwide. So, you know, where previously we thought we could just not declare any assets or liabilities, I would recommend that that's not the choice that you make going forward.
My question on this would be, I'm sitting in New Zealand and I'm not declaring my tax in South Africa, because that is what I would say 95% of all people in New Zealand is doing. How will they pick me up?
So SARS has been doing audits on the people who have left the country and people who have been declaring that they are earning foreign income, and the numbers did not tie up. So there is a unit that is busy with these audits. I can't tell you exactly now how they will know, but like Tanya said, there's 97 countries who are reporting to each other. So there's definitely ways that it could happen, but I would always tell people, and this is not to create fear, but according to the Tax Administration Act, it is anyone who has left the country, it's their obligation to inform SARS of that fact and to inform SARS that their address has changed and also that their status has changed, their tax residency status. So not informing SARS is really, it's much more of a risk of doing than not doing it. So, and it's not really such a hard process to follow and also not as costly. So I would always recommend to do it.
I hear what you say, but the problem is trying to deal with SARS from New Zealand. I don't know if you guys have ever tried that. I had a issue with them now for a while that they tried to charge me some tax, and every time I come to a point that I think I'm speaking to somebody who will listen to me, the next words they say to me is, but you should come into our offices. Now, we don't have SARS offices in New Zealand. It's absolutely a nightmare, and then you start all over again. So dealing with SARS is not an easy process, to be quite frank, from if you are from New Zealand. So is there another or a better way to do that?
Yes, definitely. You could consult with a tax advisor firm in South Africa. So I'm from Mint Accounting, and anyone can always contact us, and we represent people at SARS. We are tax practitioners, so we get a power of attorney, and we have like this virtual call to SARS as well. Sometimes we will include you in the meeting. It's sometimes necessary, but mostly we represent you fully, and it's never necessary for you to pick up a phone call to SARS, because that's ridiculous that you need to phone SARS from New Zealand. But we can do anything on your behalf, and you don't have to struggle from that side. But even us, we don't go into the branch, we just do virtual meetings.
So just back on that, sorry, I'm moving away from the questions that I have to ask, but I've got the few questions, and I know a lot of other people is having the same questions or in the back of the head. So let's say I've been earning $160,000 in New Zealand for the past 3 years, and now I decide to do my tax migration. Does that mean I need to pay a heck of a lot of tax to South Africa?
No, it doesn't, because when you become a non-resident, we look at the tax treaty that we have with New Zealand, and that says that if you have a permanent abode in New Zealand and you are there for 183 days, then you are a tax resident of New Zealand. Now, our Tax Administration Act says that you become a non-resident of South Africa when you leave South Africa. So that's basically when you get on the plane and you leave, but you also need to meet the requirements of that tax treaty. So if you have for the last 3 years earned that 160,000 New Zealand dollars, you didn't declare that to SARS because you weren't aware or you just didn't think that you had to, we don't look at that. We backdate that to what was your situation when you left South Africa. Did you have a permanent abode in New Zealand? Did you stay there for 183 days? Yes, you meet the requirements. So your tax residence is backdated to the date that you actually left South Africa. So the income that you earned does not need to be declared to SARS, especially for the last 2 years, because you already became a non-resident in the first year already. So this is where people are not informed, and that's, I think, why they stay away from doing this process, because they are scared that they are going to pay the tax. But that is not the case. It is backdated.
I fully understand why they are scared. Let's take a different example. If I'm out of New Zealand for 3 years on a work visa, I don't have residence, I don't have anything else, but I do not plan to go back, can I still do the tax migration, even if I don't have residence?
Yes, you can. So it's not linked to having a permanent residency. It's linked to where your home is. So if you left South Africa, you don't have a house here anymore, your house is in New Zealand, your work is there, your kids go to school there, you have your gym contract there, you know, like all your central vital interest is in New Zealand, even though you're only on a work visa, your intention is not to come back. That means that you've set yourself up there. You can get permanent residency later, or even if you never do, your permanent residency and your tax residency is not linked to each other. So you don't have to have that status in New Zealand.
So, yeah, I'll speak to Tanya a bit later, but I also need to do my financial immigration now. Everything has been handled off, and I've been taken out of the, as a director from the businesses that I've sold. So everything is ready for that now. I've got a question that I got here. How is the exit tax calculated? But you got to tell us first, what is exit tax? It sounds dangerous.
It does actually. Okay, so it's a deemed trigger that happens on the date that you leave South Africa. So it's basically the resident you selling your worldwide assets to the non-resident you. And the reason why we look at it as two separate people is because we are taxed differently as a tax resident and as a non-resident. So on the date that you leave South Africa, certain of your assets will be a deemed sale, and that will then attract capital gains tax, and that is what is referred to as exit tax. So there's certain assets that's excluded from that, and that would be your fixed property in South Africa. So if you leave your house in South Africa, that will not be a deemed sale, so no exit tax on that. If you have certain shares in private companies, depending on some requirements, that might also not attract capital gains tax, and certain equity shares. But anything else that you own, so let's say you've got shares or unit trusts, or you own a property abroad, or whatever other assets you own, that might attract capital gains tax. And how it's calculated is whatever the market value of that asset is on the date that you leave South Africa, that becomes your selling price. So you don't have to sell the asset, but it does have a selling price, and it would be the market value. And then it's a normal capital gains tax calculation, selling price minus your cost price that you paid for it, and then the capital gains is calculated on that.
What happens if I don't have a house? I've sold my house and I just have cash. I move the cash over with you guys to New Zealand. Where's my exit, or what is my value at that stage?
So your exit, there's no exit tax in that case. It would be the sale of your property would attract capital gains tax. So if you have a property in South Africa, and let's say you emigrate and you don't sell it, in the future when you sell that property, you are going to pay the capital gains tax on it. So in your case, if you have sold your property and then leave South Africa, it's the same process for when you're a resident to when you're a non-resident. So when you sell the property, that's when the capital gains tax trigger, and you'll pay it on whatever you sold the house for minus what you paid for it. You get to deduct certain expenses like your attorney fees, transfer duty fees, if you've done any improvements, and then capital gains tax is then paid in that year that you sold the property. So then, to answer the cash portion of that question, if you then only have the cash left that you have when you emigrate, cash does not attract capital gains tax because that cash would have been taxed either as a salary or, like you said, the sale of the house. So it's already taxed money, so it's not taxed again.
Okay. Oh, let's see the next question. The 3-year requirement. What is that, and why?
Why? I actually have a good answer for the why, and that is that people have just emigrated from South Africa and withdrawn their retirement annuity, and they weren't sure if they're going to settle in the other country. So they would then take their retirement annuity, come back to South Africa, and be a risk really to be on the government pension. So I think really it's coming from that point of view. But the 3-year requirement is that you can withdraw your retirement annuity from South Africa when you've been a non-resident for 3 consecutive years. Whereas prior to that, on financial immigration, it used to be immediately when you emigrate, you can take your entire retirement annuity fund. So there's just a 3-year waiting period now. But it only relates to 3 years. It doesn't mean it started on the 1st of March 2021, but it doesn't mean that someone who's been out of the country for 10 years need to start counting again on the 1st of March 2021. So it's backdated. If you've already been out of the country for 10 years, you can immediately now withdraw your RA.
Okay. Question here is, how are preservation and pension funds treated with regards to the 3-year rule?
So pension funds are not affected by that at all. You can withdraw your pension fund when you deploy. The preservation fund, you have the option once in your lifetime to withdraw either a full lump sum or how much ever you want to withdraw from that. After you've done that one with withdrawal from your preservation fund, it gets the same rules as the retirement annuity fund, whereby you can only withdraw it on maturity, or if you do your financial or your tax migration, then you also have to wait for 3 years. So if you have withdrawn a lump sum before, you have to wait for 3 years. But other than that, if you've got a preservation fund that you've never withdrawn from, you can immediately withdraw from it.
Okay.
Yeah, can I just add something on there as well? Because the question comes up around living annuities as well.
Yeah.
So many clients that immigrate would go see their advisor, and then obviously the funds get put into a living annuity. We cannot withdraw on immigration a living annuity until it reaches the value of 125,000. So any amount below 125,000 is only when we can withdraw the full amount. So just a tip: if you are planning to immigrate and put your money into a fund, a living annuity, we cannot withdraw on immigration.
And the problem is we picked that up, what, about 3 years ago with one of my clients that was in a living annuity, and an idiot of a broker, sorry if I'm calling him an idiot, but I think he was an idiot because I haven't got the faintest idea what to do. So sorry about that. So yeah, let me not get worked up about that.
It's just not easy to get the clients that get guided correctly, and especially if they're going to their advisor and say, I am immigrating, you know, then the right thing would be not to put it into a living annuity because you can't effectively withdraw.
That's right. I mean, people think that advisors, and I probably think that this is due to poor training. People think that advisors that only work in South Africa know everything about tax migration and offshore assets and so forth. And I think that's very far from the truth. The advisors that I've seen, a lot of the advisors that I've seen have given people totally the wrong information, and it bites them in the back at the end of the day. So another question here: how are preservation and sorry, I've read that one. What if I have no assets or income in South Africa and left many years ago? Must I still inform SARS that I immigrated?
Yes, so you must still inform SARS, because what SARS is wanting people to do is to seize their tax residency. And this is even if you have no income or assets in South Africa. And it's a fairly simple process. It's really an online application that we do. We inform SARS where they are now and why they are non-residents of South Africa. Obviously, SARS wants to look at have they declared any of their capital gains tax. But I mean, if they didn't have any assets, then there's nothing. So this is also why we always advise people to do it, because it's such a simple process, but it just relieves them from any future problems that they could pick up with SARS. So it's called the Cease to be Resident application, and it's a very simple process.
This question just came in, and it's probably back to the fact that we just talked about capital gains tax. Person asking, so if you sell your house before immigration, no capital gains tax. That'll probably be on your first or your house that you live in. But when you sell after immigration, then you will pay capital gains tax, question mark.
Okay, so if you sell your house where you live in before immigration, then you've got a primary residence exemption of 2 million rand. So the first 2 million rand profit that you make on that house will be tax-free, but the portion over that will be taxable.
Okay.
But
you've got to say that again. It's 2 million rand over or profit that you make.
Profit, yes, not selling price. So the first 2 million rand profit is tax-free if you lived in that property. So when you immigrate, obviously now you can't call it your primary residence anymore because that's not where you live. So there's a few rules here. The first is that if your property is on the market and you are trying to sell it, you have up to 2 years for the property to be on the market to still get your full primary residence exemption. The only rule is that you can't rent it out in that period as well. It's got to be on the market because otherwise it's a trading income. If you do not have it up for sale and you want to earn rental income from it, so then it becomes a trade income, then it gets a portion. So let's say you own this property for 10 years and you have lived in it for 5 years, then you immigrated. After that, you rent it out for 5 years, so that means 50%, 50%. Then your primary residence exemption would just be a portion. So you'll still get R1 million primary residence exemption for the period that you lived in it, but the other million falls away and you'll pay capital gains tax.
All right. So if I sold my house before I left South Africa, because I'm going to immigrate and live in my primary house, then I won't have any problem of paying capital gains tax back into South Africa now.
Depending on your profit, yes.
Oh yeah, I mean the profit, if the profit was below 2 mil.
Yes.
Okay, I think a lot of people struggle with that idea. They think they're suddenly going to be plucked hard by SARS for a lot of money.
Yeah, there's also there's a new update relating to that tax migration process. I'm going to let Donna have a chat about if a client has concluded tax migration and left asset in South Africa. Maybe you can just give us some more information around that, Donna.
Sure. So
Donna can answer that with this question as well. Can I still own a house and rent that out after I've done a tax migration?
yes, you can. So at tax migration, you're not obligated to sell your fixed property. You're not obligated to liquidate everything and remit it. You are able to retain an asset in South Africa. So that is the prerogative of the client. So basically what you're doing is you're declaring to SARS all your assets and liabilities. And then what happens is once that it's called a TCR01 application where you declare this assets and liabilities. And once you have declared this, SARS issues a certificate in terms of immigration. This certificate is issued once off. So, and it gives you an approval amount linked to that certificate. That certificate is valid for a 12-month period. From a Reserve Bank point of view, that document proves to the Exchange Control or to the Reserve Bank that you've ceased to be a tax resident in South Africa, and you are therefore regarded as an immigrant / non-resident, right? So your funds are dealt with in terms of that legislation. Now, with regards to immigrants, your resident Reserve Bank allowances fall away. So you can't make use of the 1 million discretionary allowance, and you cannot make use of the foreign investment allowance as a resident anymore. The allowance allocated to immigrants is 10 million per calendar year. So, and if you are looking to remit more than 10 million in a calendar year, or your approval is for more than 10 million with SARS, you are required to submit an application to the Reserve Bank as it's above the allowance of 10 million. So there would be an additional verification process if your assets exceed 10 million. Now, when you get that approval from SARS, and it's up to 10 million, so it's within the 10 million, and you choose to remit only X amount of those funds, and you choose to keep an asset in South Africa. That certificate is valid for a 12-month period. So if you have not remitted your remaining assets during that 12-month period, and your certificate in terms of immigration has expired, and you are now looking to remit one of your remaining assets, then we are required by Exchange Control to allow the remittance of those funds to get a certificate in terms of good standing. So that sort of extends the certificate in terms of immigration. In a hypothetical situation, if the tax clearance certificate in terms of immigration has expired, as well as a certificate of good standing, and you are looking now to remit the remaining assets, we are required to approach SARS, and we do an application to get a certificate in terms of foreign investment allowance. So there is that, if you choose to conclude tax migration and you choose not to remit all your remaining assets, there will be an admin process to remit those remaining assets in the future. So that is one of the things that clients aren't aware of, that there will be an admin step every time you remit a remaining asset and you don't have a valid certificate, but it's still within its validity period. So there will be that extra admin step, and I think that is the sort of downside of that moving to a SARS process as opposed to a Reserve Bank process.
Okay.
So Jan, even if you did your tax migration 10 years ago, it wasn't a requirement in the past. So you didn't have to go to SARS. So any client leaving a remaining asset now, we now need to go to SARS, even if you completed tax migration 10 years ago. So that process is now changed.
Okay. And how long does this whole process take normally?
So from the start of tax migration, once we would estimate typically from the time of the request to the remittance of funds is about 2 to 3 months. But once we've remitted the funds, we need to be cognizant that a final tax return has to be submitted, which takes, we need to wait for obviously the relevant tax season. And then thereafter, if you have no remaining assets in South Africa, we can proceed with the deregistration at SARS, and that in itself takes a while. So the final process can take, I've had clients like about one to 1.5 years to completely take everything out.
Yep. So the other question will probably be regarding costs. What will this cost me to do this?
Sure. So tax migration offering by currency partners is we have an individual and tax migration fee, which is 15,500, and that includes services such as the cease to be a tax resident application to start.
You've got to say rand with that.
Rand, sorry, of course, 15,500 rand. And then that's for an individual. So the difference between and then we have a family unit fee, which is 19,500. Now that family unit fee no longer includes the spouses and the children, because if you are not registered for tax in South Africa, you don't need to do tax migration. So why would we charge you for that, right? So it's generally between spouses who are registered in South Africa. So that's the family unit fee. It's a family unit fee, however, the applications are done as individual. So you do your own tax migration process, no more on one document declaring everything as a family unit.
Okay.
So that's differentiation.
So also it's worth mentioning that that's only if you do the full process. That would include if you have funds to send out of the country or retirement annuities that you want to withdraw. But if they have nothing, so like I said, if they have no assets in South Africa, no income, then it's just the cease to be resident declaration. That fee gets charged individually. So it's reduced a lot. It's not the package fee. So we then, the clients can ask us and we will then advise them on the fees.
Yeah.
Another question that I had, but somebody asked me the other day. So you guys do the full tax migration for them. Do you also go to the Liberty and the Sanlam and the Old Mutual and get the RA money from there, or do they need to do that themselves?
Yes.
Yes,
we do that. So we facilitate the whole process of withdrawing the retirement annuities, and that would be requesting withdrawal forms, updated statements, and going through the headache of phoning them once a week and following up with them, and it is really a tedious process. And then also with getting the funds paid out, and then we communicate with currency partners client services team to then send the funds abroad.
So that's included in the fee.
All of that
included in the fee, yeah.
The question up here is, must I sell all my assets in South Africa on immigration?
No, you do not have to. You are not obligated to remit your funds. You just need to declare it, and you can keep it in South Africa. There was the difference between the previous process and now is back in the day, you had to close all your South African bank accounts and you could only transact out of one account called a blocked immigrant account. That has since changed. So you are not required to remit out of only one account. You are, however, required or obligated to inform your South African bank, your commercial bank, that you have tax migrated. Okay. So there's just an obligation to let them know, because they need to change the status of the account, but there's no obligation to close it.
Oh, that's interesting. Yeah, it's quite a big change, that, hey?
Yes, yeah.
Because a lot of people still have South African bank accounts and pay money over there to support their parents or other siblings and so on. And now suddenly they think they will be left without a way to get money to South Africa. So,
exactly.
Let me see what other questions was there. Can IT register my tax number? Don't we all want to do that?
Yeah.
Yes, you can do that. You obviously have to make sure that you have no more assets in South Africa and that you're not earning any income from South African source. Then you can deregister your tax number.
What happens if I now suddenly, after tax migration, need to get an inheritance from somebody in South Africa?
Right. So there's a dispensation in the new regulations that deals specifically with inheritances. So if you can prove that you've ceased to be a tax resident in South Africa, you can freely remit those. So we also, sorry, let me just go back a little bit. So when you tax migrate and you receive an inheritance after you've tax migrated, those funds are dealt with as non-resident funds. So they are freely transferable. It also makes it easier because it's taxed at the origin, so at the, just in the state. So from that perspective, those lump sums from policy payouts as well as inheritances are a lot more easily transferable, especially after you've tax migrated, because you merely have to prove that you've ceased to be a tax resident. This has become your asset after you've tax migrated, and it's dealt with as a non-resident in terms of exchange control regulation.
Okay. If I now really need the money to buy a house or something, or need my RA money in New Zealand to buy a house here, then I really need to plan ahead to get the money out. It's not going to happen overnight.
That's correct.
And it's not going to be your fault that it's not happening overnight.
Unfortunately not. It's all SARS' turnaround time, so, and as you know, it's difficult to give SARS a deadline. So.
Yeah. Other question I've got. Okay,
sorry, just to cut in. Yeah, it's very important that as a South African, even if you get some residency in New Zealand, that you keep your green barcoded ID book. It's really, really important. The reason is in any exchange control rulings for any transfers that we do out of South Africa, they don't request a South African passport. They request a South African green barcoded ID book or the smart card.
Okay.
Okay.
The other question, if I have tax migrated and it doesn't work out for me in my new country, wherever that might be, what happens if I've got the return? Am I allowed to return?
Yes, you can definitely return. From a SARS perspective, you would just inform them that you are now a tax resident in South Africa again. And if you have deregistered your tax number, you can just apply to reinstate that same tax number, and you continue as if you never left.
Okay. And how difficult is that to get that tax number up and running again?
No, it's quite easy. It's an application that we do with SARS, turnaround time 21 working days, plus however long SARS wants to take after that. But that's basically the process.
Okay. Always a hiccup dealing with SARS, I've found. So, all right. I don't see any other questions. Let me just check on the other side as well. Where we're going now. No questions down there.
Please.
Is there anything else that we need to add to that?
I don't think so. I think the one challenge we have, and the one grey area currently when you're doing tax migration, is especially where a client has left many years ago. They either have their ID book or they don't. They've never registered for tax, and they are a beneficiary of a distribution from a trust. Now, trusts are very complicated vehicles. And because the Reserve Bank and SARS don't always clearly communicate with each other, we're finding that those need to be dealt with on a case-by-case basis. So if you have any complex queries, it's best to give the merit of the case so that we can decide the best way forward. So that's the one grey area we're currently sitting with.
So don't burn that green book yet.
Yes.
I've got to make the remark. My South African ID looks like it has been forged. It's just been made very badly. So I won't proudly display it to anywhere. So
yeah, because they're digital, all they need to do is keep a copy somewhere in a folder. We don't actually need physical.
A certified copy, I would definitely recommend.
Yeah, a certified copy, if they can. But otherwise, we do accept the digital format of the ID.
Okay. All right. Is there anything else?
Nothing from our side.
I think we covered quite a bit this evening.
We had, and we're actually in 31 minutes. Can you believe it or not? All right. I was just going to pop you off here while I say goodbye. So thanks for being with us this morning. And from Mariska, Donna, and Tanya. So They are from Currency Partners. I'll just drop a link later in where you can link up directly with them, and probably one of them will give you a call. You don't have a choice on who will give you a call, so don't ask for that, but we always try to help. So thank you, everybody. Until tomorrow morning, same time, same place, or actually an hour later tomorrow morning. See you all later. Bye.